All right, we are live. Let me drag some stuff over to the other screen real quick, just so I can see what's going on. Okay, so we'll start with what's new in the software. There's not a lot of changes, just a couple of things I want to point out. There's some new forms and things of that nature. So most of you may have already seen this. The IRS has required us to offer multi-factor authentication, or what's commonly referred to as two-step authentication. Doesn't mean you have to use it, just means we have to offer it. So we offered it when you first logged into the software the first time after installation, or if your preparer login the very first time. And it's this box down here at the bottom. This is multi-factor authentication options. You can either check that box and complete the setup, or you can uncheck that box and hit OK. You have the option to enable or disable it after that first time by going to utilities and then user preferences. And there's a MFA button, multi-factor authentication button, that you can use. So if you're going to use the multi-factor authentication, make sure that you scan the QR image that appears with an authenticator app. You can find them in whatever app store it is that you use, the Google Play or the Apple App Store. You can use Google Authenticator. Microsoft has an authenticator. There's one called LastPass, OneAuth. There's quite a few out there. And essentially what will happen is if you use the multi-factor authentication, you'll log in, you'll put your username and your password, and then it will prompt you to enter a code from that app. So you open the app and it gives you a code, and those codes, depending on the app, usually change about every 60 seconds. So we improved the state support in interview mode. We expanded the state section and we made it easier to complete the entire return in one area. I don't know if anyone actually uses interview mode, but it is one of the changes in the software. The invoice fees are a little easier to understand now. We redesigned the return invoice. It breaks down the fees into 3 sections now. So fees related to tax prep services, fees related to software and transmitting, and then itemized billing. You'll see this is the fees related to tax preparation services. Most of these fees are yours. Obviously, the remote signature fee is not. That's going to get paid to the developer. And then we have the transmission fees, transmission fee, transmitter fee, the technology fee, those things.
I'm sorry, Kevin, I have a question.
Sure.
So for the interview option, what is that used for? Is that like over like virtual Zoom, or if they come inside the office?
The interview mode is just a different mode for a tax preparer to complete the tax returns.
Okay, so it's just a different functionality.
Yeah,
okay.
It's much closer to TurboTax than a direct input. You sort of go question by question. And if you sort of look at the image, there's these icons that are here. And so you answer the questions as you go through the process, as opposed to just kind of being able to do what you want to do freely.
Okay, awesome. Thank you.
You know what, to add to this, I mean, it's your choice, but for people who already know how to do taxes, that one could be so slow because you already know mostly everything. I think it would be more for your employee who don't know how to do taxes. It's a really great feature for them to do it that way. So use the software in that version, which is the interview version.
Right. And they can get to it. Let me see if it's in that image. Yeah. There is a button in the toolbar that says interview right next to close, in between payments and closed, and that's how you would access the interview mode if they needed to.
I have a question, Kevin. Sorry to interrupt. This is Celia. So for people who know how to prepare taxes, but I'm new to using y'all's system. Is it a required? Do you think it's better to use interview mode?
No.
Just until you're familiar with the system?
No, I wouldn't. And the reason for that is you're going to want some freedom as you're learning the new system to be able to do things. The interview mode is going to take you step by step by step by step. And if you don't do the steps in that order, then it's not going to come out right. The trainings are all done in direct input mode or forms view. We don't even train on interview mode. The reason for it is there's really no reason to train on it because it is that simplistic in its style. I would say if you know how to do taxes and you know where you're looking for things, I would stay away from interview mode if at all possible.
And again, I know I said this in the morning training, but I repeat it again. If you need, if you think you need more help on how to navigate the software, send us a text and we'll go ahead and put you on our list to call you before Wednesday. So we could do a one-on-one training and navigate the software with you. We also email everyone a sample tax return. So if you check your email, you're going to see a sample tax return. So it'll be great for you to go ahead and start practicing because the return is set up to help you how to navigate the software and walk you step by step. Not only how to do a tax return, but at the same time showing you how to navigate the software and where to go for everything.
Yeah, and I will also show you some helpful guides and documents that are available on the support site as well, right after this piece, actually, as a matter of fact. So for those of you that are familiar with the wallet and those of you that are new, the wallet has been integrated into the transmit window, so you can actually see what's being charged before you actually even transmit the return. So PayJunction integration, this was done this year. PayJunction is a merchant service. Will let you process credit card transactions in the software. I don't know a ton about them. So if you want more information, you can just go to payjunction.com. You can get more information about them specifically. And this is where it integrates into the software. So if you do sign up with PayJunction, you can integrate it into the software under setup, office setup, and right above the appointment address button, there's a PayJunction API. You're going to put in your login and password. It's pretty simple integration.
And Kevin, this is if we want to go ahead and charge the client that paid upfront, if we want to charge them through credit card.
Right. You can process the payment actually through the software if you are signed up with PayJunction. I would encourage you, like I said, I don't know a lot about them specifically, so I would encourage you to check out what their rates are and, you know, their per transaction fees before you just kind of sign up blindly.
Thank you, Kevin. This is Joanna. So yeah, I was just going to ask, but I think you answered the question. You don't know, you have no idea what their charges and fees are like per transaction, 3%, which is typical, or anything like that, correct?
No, I don't.
Okay, thank you.
And for those of you that are new also to the tax business, some of the things that other people use is either Square or PayPal to charge the clients that want to pay upfront, but they're using the form of payment of debit card or credit card. And another thing that we do is we let the client know, hey, if you want to pay upfront, if you want to use a debit card or credit card, we're going to add a 3% on that. So many times they come and pay you cash. So just some side note there.
So a couple of new forms. I'm not going to spend a bunch of time because quite honestly, I don't know if any of you will even use these forms. They're just kind of random. The 8911, this form is used to figure any credit for setting up a refueling station, if you will, for any alternative fuels that were placed in service during the tax year. I seriously doubt anyone's going to see this form. The 8990 is used to figure the amount of business interest expense a taxpayer can deduct and the amount to carry forward to the next year. They updated the so income and details checklist that will display and print if the taxpayer receives in advance. So that's a page that you guys need to be aware that is going to print for anyone who got a taxpayer advance. Okay. Schedule 1, 2, and 3 have all been expanded quite a bit. They are now 2 pages apiece. So we went from the IRS trying to dwindle the tax return down to 1 page to now it possibly being 8 pages long for just the 1040. So that is an all-time backfire by the IRS, because now the 1040 is 2 pages, Schedule 1 is 2 pages, Schedule 2 is 2 pages, and Schedule 3 is 2 pages. So if you ended up with all 3 schedules, you're going to end up with no less than 8 pages. So, and the reality of it is they didn't change a whole lot on those. I'll point out a couple of fields later when we get into the tax law updates, but for the most part, it's just expanding out fields that were the other fields. So other income, other adjustments, things like that. They just expanded those out to have individual lines versus them all being in a worksheet attached to that line. So on the Schedule C, 2106 in the Minister worksheet, meals are 100% deductible in some cases. So you want to make sure that your taxpayer does qualify to meet those cases. It's most people are going to qualify in that realm, but you definitely want to double check. As a reminder for the 2106, nothing has changed since 2017. The 2106 is basically dead for the absolute majority of taxpayers. Still, that has not been changed. I know there was some discussion over the summer about that possibly being changed, but it never actually was. So I just wanted to bring that up in this section here. We changed the EF payment form because the IRS is now going to allow direct debits on amended returns. So the EF payment form now has 4 lines for direct debit, main return, and then you can submit the amendment up to 3 times. 1099 miscellaneous, there's a box 11 now for anybody who bought fish for resale, I guess. EIC checklist, I'm going to talk specifically about these, but it's kind of what you need to know a little bit, just kind of a preview. The minimum age for taxpayers without qualifying children has been reduced from 25 to 19, except for certain full-time students, and that's an important note. And then the maximum age for taxpayers without qualifying children has been removed. So you're going to have a lot more people, the pool of people who might qualify for EIC without dependents, without qualifying children, has expanded a little bit. 2441, I'm not going to go into the specifics in here because I'm going to go through it when we do tax law updates, when we do that presentation. Just know that it is significantly different than it was last year. Same thing with the 8812. We'll touch on those things in the tax law updates. Some new business forms. There's the K2, which is used to report items of international tax relevance. And then the K3 is used to report the partner share or shareholders, their share of the items reported on the K2. 7203 is now a standalone form. The IRS pulled the S Corp basis worksheet out of the instructions and turned it into its own form. So 7203 is just an additional form that came from that S Corp basis worksheet. 8990 we talked on earlier. The 8996 is a form used to certify that the corporation or partnership is a qualified opportunity fund. Again, I don't think most of you guys are going to see any of these new forms, with the exception of the 2441 and the 8812, which we're going to go over in tax law updates. Okay, so we're out of that. I want to show you a couple of websites and a couple of things that you guys are going to need to know. So this is the IND Solution support site. It's indsolution.taxpro.software. Okay, you can also get to this page from the website tab inside the software. The hours for support are posted here. There's a knowledge base that is full of articles that will help you get answers to things quickly. I want to say there's something like 60 or 70 articles, probably more, in here about everything from setup to the mobile app to text link to software updates. I mean, everything that you could possibly want to know is in there. But of course, if you need help, support is always there. You can call us at that number, 832-632-8605, or you can start a live chat. You just click and you start. You can see they're actually open. Support is open and taking calls today. So this is here. So those options are there for you. The remote support is how we connect to you guys. If you haven't done this yet, I'm surprised. You are going to do this with support, almost certainly. It's a lot easier for us to support if I can see what you're looking at versus try to guess, right? In this documents section, we have updated all of the 2022 docs in here. So software manuals in English to Spanish, user guides in English to Spanish, taxpayer questionnaire that you can use in your office for your taxpayers to complete, both in English and Spanish, and then the tutorials. So the tutorials will walk you through, and I'm going to open this one up. We'll walk you through the steps of creating a return. And I mean steps, step by step by step. And so this document is extremely helpful. I feel like, especially for those people who are new, it's about 70 pages. If you do the returns that are in here, there's going to be very few things that you don't know when it comes to doing a return inside the software. If you complete that tutorial from start to finish, do all, I think it's 4 or 5 returns maybe in here. If you complete all of them, I have a hard time believing that you're not going to know how to use this software. Like that's a crucial thing that you can do that will really help you. It's also a great way to train new preparers, especially ones that you're bringing in January in the middle of everything that's going on. Print this, hand it to them, give them a log into the software and say, do this, and I'll check it. And then we can have a discussion afterward.
Kevin, jumping in real quick. La persona que, creo que a Marfi, la persona que necesitan que yo le traduzca en español o que le explique algo, por favor, nada más puede brincar, como a Marfi, tú puedes brincar y preguntar la pregunta en español, ¿oíste? Y yo se la traduzco a él. Okay. And also, if you feel we're going a little bit too fast, feel free to let us know if you need us to emphasize on any question or anything. Sorry, Kevin, go ahead.
Oh, absolutely. Absolutely. Yeah. I move quickly because there's a lot to cover, but if you guys need me to stop and go back over something, I'm certainly okay with doing that. All right. I want to show you guys how to set up the mobile app if you haven't already done this, and where to get the information. So you're going to log into this client portal. Mine looks a little weird. It's the same place you did your bank enrollment. So it's the same portal that you used when you went and enrolled with the bank. So if you got bank enrollment here, but you want to go to support and then manage mobile app. And in here is where you can upload your logo so that your logo shows up on the TaxPass app. Let's be clear. You want your customers to download and install the TaxPass app, and then they can scan this QR code. You can right click and save it, so that you can use it in any of your marketing pieces. You can post it to your Facebook page, whatever the case is. But you also want to make sure that you get this code. Okay, this mobile app ID they can enter that directly manually into, without having to scan the barcode. They can use that mobile app ID that will also link it to. You do want to make sure that you click Publish Mobile App ID. Okay, if you have not published your mobile app ID, it won't be active and your software won't have it. And I'll show you what I mean in my software. I have not published the mobile app ID, so I do not have the option to retrieve returns from TaxPass, from the mobile app. So if you come into the software and you see that you do not have a line here that says retrieve from TaxPass, it's because you have not published your mobile ID. Okay. If you get stuck, no problem. Just call support. We'll help you with it.
One thing I could add to this, you actually, and it's something that Kevin did, you actually could design your business card. I don't know why that sounds bad.
It's picking up on somebody else.
Is somebody not on mute? Okay. So you actually able to design your business card, which is something Kevin had done for us as well, where it could have the barcode. So it's pretty cool because when you give a business card, when you're advertising yourself out there, it's pretty cool to tell a client, just scan my business card and it'll take them directly into the mobile app for them to upload their documents and everything else.
Yeah, exactly. Yeah. And
Kevin,
that's...
I have a question along with that.
Sure.
What does the client look at when, because it's the first time I'm kind of interested in something like this. So what does it look like on the client's end? Like, let's say they'll scan this, but what does it look like on their end when they do that? Do you know? If you can't show us, that's fine. I'll call support and I'll walk myself through it. But I didn't know if you had something you can kind of just show us quickly, Anna.
No, well, Kevin, I could jump in. I could tell you like this. I don't know if you could show us what it looks like, but I could kind of explain it.
Okay.
Can
Yeah,
you show
maybe.
it, Kevin? Because basically,
Slightly.
okay, so basically when the client opened it up, it's to
Mhm.
me, what I felt was it looks just like the software because they're able to do the client data. It's going to tell them to upload the document. So, you know, when you're doing a tax return, you fill out the client data and then you're able to upload the documents. The client going to be able to do all that when they hit submit. And when you're in the software and you accept that return, basically the return is already done. When I
Right.
tested it 2 years ago, it was pretty cool because when I opened, I'm like, oh, the return is completed. Like everything was done because the client able to do everything in the app.
Yeah, and
it was
there,
communicate with them on the app as well. They text you. You could text and communicate.
there is in the knowledge base, there's an entire tax pass section.
Okay.
I don't have the iPhone installation in there because I don't have an iPhone, and no one at our company has an iPhone, so I haven't been able to record that iPhone. But the installation process isn't any different, quite honestly, between iPhone and Android, other than just where you go to get the download. But there is a video here that's already in here that will show you what the process is for submitting an entire return.
That's cool. Yeah, I'll take a peek at that after our training tonight.
And keep in mind, you guys, that it's important for you to ask your client, do you have an Android or an iPhone? Because you're gonna get 2 different links. And you gotta send it accordingly.
Okay. And do I send this from the software, Kevin?
No.
No, I don't. Okay.
And the reality is, you could send them either a link, or you can just tell them, go into your app store and search for TaxPass.
Okay.
If they search for TaxPass, they're gonna find it. It's not, and if you, yeah, I logged out. Hang on.
Joanna, what I used to do was I would text it to them
Okay.
from my cell phone. That's what I would ask them. Hey, you have an Android or iPhone? Once they tell me, then I send them the proper link.
Yeah, and you can get the links from here to share.
Oh, I see it. Yeah, I gotcha.
So if it's iPhone, you just send them this. But that's what I was saying. If they search TaxPass, they're gonna find it. Just tell them TaxPass, all one word, and this is the and here's the mobile app ID.
Sure. Okay,
And it makes it it makes it a whole lot easier in that process.
Okay.
And Kevin, I don't think we told them that there's 2 apps. So you have the app that is for your client, and then you have the business owner app. So you also got to download the app, but your version is going to be the ERO version.
Okay.
On your phone, and then the client's going to have the taxpayer version on their phone.
I will tell you this: you don't have to, other than for maybe the messaging, because the rest of the stuff that's inside that ERO Go app doesn't really. It's a lot of reporting stuff. There's some office dashboard stuff where you could turn your office off, but I don't know why you would do that. For the most part, it's a lot more reporting than anything else. So I don't want to put the impression that you can do a tax return or submit a tax return through ERO Go. It's not that kind of app.
No, it's just for if the client texts you from the app, you'll be able to see it on your ERO Go app as well.
Well, that's the other thing. If I had this active, let me see if I can make it active real quick. Hang on.
Okay.
Because this is a different, hang on, this is a different one. I did not mean to move this. That needs to go back over here.
And Anna, once you complete the tax return, will they get a copy through that app or no?
Kevin, that would be Kevin.
Yes, they can. They can.
They can?
Yeah.
Oh.
They can. They can. They can. They just have to save it inside the app. I would still send it.
Oh, yeah, sure.
You know what I mean? Just because.
Yeah.
But the advantage they have, Joanna, is that if they were to lose any paperwork, they could go back to the app and get it from there.
Mhm.
Right.
That could be one incentive for, you know, how people like, I don't want to do it. So, well, the
Yeah,
advantage
yeah.
of you doing it through the app is that you will always have access to those documents that you submitted on the app.
Sure. Is there a cost to the app?
It's
No.
totally free.
Got it. Okay.
Can someone give me the name of is it TaxPass, the app for the clients?
Yes.
Pass, yeah.
Tax
Okay.
Pass, all one word.
Okay.
That's
thank you.
awesome.
Yeah.
But
No
remember, you
space.
want to be able to go ahead and opt in for the app so you could get your unique code. Because
Yeah.
when
Yeah.
the client download it, you got to give them that code. So that code is what's going to merge that app to your software.
Right.
That's what I need help with, so I'll call.
Okay. I have one question. So if we have like our own client portal, I know it's a way that we can import Crosslink, but I'm trying to figure out, like, if we're doing that and then we use the app, does it all kind of intertwine with each other to just, because my clients can like upload all of their documents into the client portal. So is this like a substitution, or is it not hard for them to do both? Does that make sense a little bit?
I
don't think
also
they-
have a question. Go ahead, Kevin.
I don't think they would need to do both. I think at that point you're probably overwriting data, right?
Correct.
They would probably use one or the other. I'm not sure what client portal software you're using, but if they've got an integration piece into the software, great. You know, your clients can certainly continue to use that as long as everything's functioning the way you expect it to. The mobile app is more geared toward clients that don't have that kind of setup.
Correct.
In terms of so yeah, it's more of a replacement. But I have to be honest, depending on what client portal software it is that you're using, you probably have a lot more functionality in that than the mobile app. The mobile app is really just designed to be able to get people to submit information to you with it being secure and directly into the return.
Okay.
Yeah, I had client, and we used a portal before, Chanel. And if that's the route you're going, you don't need both. I would just stick to one.
Right. Yeah.
Okay. Because I was thinking some of like the older, we have the older clients who cannot basically, maneuver through these portals. So I'm thinking it can be an option that if you want to do, the app, but I try to keep it on the portal. So I get it now.
Yeah.
Okay. Yeah, I think if that's the case, you definitely, because you were able to use both.
Yeah, you can use both.
Yeah, you can.
I just wouldn't make sure you don't use both with the same client.
Correct. Yeah.
Right. That's the key piece. So I wanted to point something out to you, Anna, and this is why I went ahead and did this. We've integrated the messaging into the software, so you legitimately don't need the ERO Go app. Unless you want it for the reporting purposes, the messages was the key piece of why you needed that ERO Go app. But now that we've integrated those into the software in this TaxPass messages section, you don't need it anymore for that purpose.
Last year, right?
No, we rolled that out this year.
This year, okay, got it. So yeah, so that means we won't have to download it at all, really.
Right, unless you want it for the reporting, to keep tabs on offices. I know a couple of people that do that because they've got multiple locations, so they use it for the reporting purposes. But beyond that, there's really not much else to it. And what I have found historically is it just seems to cause more confusion for preparers than anything else.
So if everyone can see the difference now that Kevin's went ahead and opted in, you're able to see, Kevin, show them right now how it's different, how you're able to see the tax app.
Yeah, so we've got the TaxPass mobile app retrieval now, and it's loading. I don't have any returns because I just did this. As well as now that it is active, right? I have TaxPass mobile app retrieval, and I also have TaxPass messages. So if your mobile app ID hasn't been published, if you didn't publish your mobile app, then you won't have these options. So go into that portal, publish your mobile app, transmit, and that should change. If it doesn't, call support. We'll figure out what's going on.
And the cool thing is that when somebody sends you a return through the app, this is where it's going to show, where it says TaxPass. You're going to see the number there.
And all you do is click to import.
Kevin, I have a question. Chanel, I think it was. What was she talking about? What portal was she talking about that she's able to upload all her clients' information?
Well, they have different ones. Chanel, I don't know if you want to share the one you use, but the one that I know is called Atom, and we could send you that information if you like.
Oh, I know about Aran and, okay, but it's a different thing.
Oh, Chanel, did you use the same one?
Yeah, no, I use that one. I don't know how to, it's so much on there that I don't, it's like using an iPhone. I don't use it to the full capacity. But they do keep their things, and I like it because of the text messages. I don't want anything I say, they say to be misconstrued, and it all stays in one place. So that's why I didn't want to confuse introduce the mobile app, and then I have that, so yeah.
Okay, thank you.
Uh-huh.
Okay, so wanted to make sure that you guys knew about all of those things, in particular how to do that. The other thing I want to show you guys inside the software, it's a default setting. I wish it wasn't a default setting because I know it bugs you guys in particular, but the audit protection is on by default. So if you want to turn it off, go into setup and billing setup and go to this PPR. No, sorry, it's in custom settings. And when you come in, it's probably going to look like that. Just click and uncheck it and hit OK. That's it. It will take it off so that it doesn't default onto returns. And I'll show you what it looks like when it does default. These are things that you just want to pay attention to because you see it, go take it off. But even if you see it on the return, I can show you how to take it off of there as well. So let's go do this.
Excuse me, I have a question. What are those charges for? I mean, this is gonna be my first year doing, being a tax preparer, so I'm kind of like get a little lost, very
Sure.
quick.
Sure. This particular piece is for audit protection with a company called Protection Plus. Basically, if your taxpayer gets audited, they get a letter from the IRS. For whatever reason, they can reach out to Protection Plus, and Protection Plus will take over handling that issue with them. That's really what it's used for.
Go ahead.
It's not a bad product by any stretch of the imagination. But I know for you guys, it just doesn't need to be added to every return. And if you want to add it, you can, but the default setting for the software is to auto add it. And that's what I'm showing you guys is how to take that off. And I'll show you what it looks like when it auto adds.
Before you go forward, Kevin, can you go back to that box so that just to add to what Kevin just said. So one of the reasons we wanted to cover this, and this goes for my old business owners, right? A lot of people was complaining how this was automatically adding to every return, even though that the client didn't opt in. So he's showing you guys right now how to make sure that doesn't happen. Let me say that first. And for my new clients, let me just cover this. So basically, this is just a product that you could sell to your client, an additional product you could sell to the client. For the cool thing is that you could do auto add to their fees. So normally I do 54.05, so it makes it $99. So let's say you tell your client, hey, if you like, especially your client who has Schedule C, that's the ones that you want to sell it the most. Like, hey, since you have Schedule C, you're probably more likely to get audit. Do you want to buy a audit protection on your tax return? It's $99. So what that is that if you get audited, this company gonna go ahead and represent you and help you through the auditing process. When you sell that to the client, the company automatically gonna take the $44.95, but they're gonna deposit with your preparation fee the $54.05. So if your preparation fee is $100, what you're gonna see in your bank deposit will be $154.05, which it'll be the preparation fee and the fee that you added on top of the fee that this company charges.
Yeah, that's exactly right. There's a question down here at the bottom. Now, I'm going to uncheck mine and reload my billing and see if it auto adds. See, it's not auto adding, but it may be because I've already done this return afterwards. So if they want it, you'll answer this question yes, and it will add the Audit Assistance Protection Plus agreement to here. And they will sign this when they do the bank application or the return signatures. You will also see it. See, all of this stuff shows, see this 74, 54, 05, all of this stuff. That's where it gets a little like I don't know what this stuff is. And that's why we separated out this invoice. So the audit protection plus is showing as $99 here. You know that 54 of that is coming to you. So your prep fee, and this is important on the bank application, if you do this, if you add on to the audit protection, is going to show the audit protection included in here. Now my fees are completely out of whack because I have 350 and 350 and I have a bunch of stuff on here, but let me refresh that. So if we go back to the bank app, you'll see it's 50, it is now 40405, right? 350, and then whatever I added on top of the protection plus, that's going in there because it's an amount paid for tax preparation services. Okay. The transmitter fee, you see that 117.90, that is showing up off of the invoice. That's going to be basically these things all together. And then that gives you the total of all the charges. And then if you go further down, you can get into itemized billing and things like that. But that's where you're seeing that. And that's where you get sort of, some people will get confused, is in this section. Let me tell you this is an easy little trick to know whether or not the audit protection added. And this is why I don't set it exactly for 99, Anna. I say, like, if you just want to do 54, that's fine. Because if you set it to the exact whole number, it makes it a little trickier to figure out. So watch, if we set this to 54, let's reload. Why is it not? My billing's not reloading. I don't know why, but that's okay. It's all included in these fees in this 117.90. And if we go look, let me see, invoice. You can see that all of that stuff is in here. That's it. If it ends in 90, sorry, you had it right. If you see it ending in 90 on this transmitter fee, the amount paid to transmitter, you've got audit protection on the return. If it ends in 95, you don't. It's that simple, because the transmitter fee and the technology fee equal $29.95 every time without question, unless you have reserve, right? If you've got an add-on to it, that's different. But if you see this amount, right, this transmission fee will always end in 95. The technology fee will always be 4, right? Will always end in 95. So if it ends in 95 on the bank application, then you know there's no audit protection. If it ends in 90, there's an audit protection. And Anna, you can attest to this, because when you ask me about these, I always ask you, what's the fee? Right? Is it showing, is it, something .90? If it's 90 cents, then we know, right? To take it off, super easy. Again, on that client data, just answer no. And it will remove it all the way out. And when we go look at the bank app, now it's 95, right? That fee is now gone.
Yeah, and for the new clients, again, just like we covered in the first training, little things, little reminders are important. I will actually add this as well. My little sticky note, make sure to check if the audit protection added automatically, because once he add it and he charged the client, we can fix it or give you the money back. You're going to be out of the money because the client's going to say, I want my money back because I didn't tell you I wanted this. So now you got to give him the money back, and you're going to be out of it because we can refund it to you. Right. So that's why it's important to put that you check that box and make sure that didn't add automatically. And again, for the new business owner, on our one-on-one training, we will go into the fees and how to set up the billing and things like that, so you'll have a peace of mind.
Yeah, let me open this one because I know this return is done, and I want to show you guys what I'm talking about.
Okay, so I'm sorry, if it ends at 95, is that, it was not added, and if it ends at 90, it was added? You got it.
That's it. That's the easiest way to tell when you're looking at the bank application itself. Is that, because if it ends in 90, then you know it's taking 95 and 95, right? And you know that the audit protection at that point is on. There's a couple of other ways, but this is one of the other ways. look, check under file options. You'll see that audit assist. If that's there, the audit protection is on the return, right? If it's not there, then it isn't. The last check for you guys is when you actually go through the tax return documents. And I'm going to show you briefly what that looks like so that you see, because there is a page they have to sign for the Protection Plus. So once we go through, it's past the bank application. I think it's right before. Oh, I'm only doing bank docs. That's not good. Ooh, come on, close. I must not have the return selected in my setup. I do on client, but not on prepare. So here's that. So if we go print return, we should be able to look at the PDF now. I hope I'm up to date. There is a page in here. Where are you at? There it is. See, the 1 million tax audit defense membership partner program. If this is printing out, and it's a pretty big section about Protection Plus, like there's also this page right here that they have to sign attesting that they know what the fee is. Right. So if you see these pages around page, depending on how you're set up, around page 17, 18, something like that, if you start seeing these pages, then you know Protection Plus is on. So when you're going through the return, the return pages with the client to make sure that they're signing where they need to sign. If you see that page, audit protection's there. And if they sign it, then they're agreeing to it. So that's just something to keep in mind. That's sort of your final last check before you send. So I've given you a couple of different places to find that so that this doesn't happen. And I've showed you how to disable it as well.
Okay, quick question. So I know in the system we can send it to their, mobile phone or whatever to sign.
Mhm.
Now I think it's a way, that they could turn the phone and sign it. But
Right.
does that allow them to sign that one document, or does it just go for the full return?
It goes for the full return.
So when they have to sign that one document as well.
It's included in the return print packet though.
Okay.
Yeah.
So that one signature goes for that as well. I just wanted to make sure.
Yeah, it goes
Awesome.
for
Okay.
bank. It goes for bank docs as well as
Right.
essentially when they're going to sign one time and the signature is going to go everywhere it needs to go.
Okay. Awesome sauce. Thank you.
Okay. So,
Kevin, one thing that if you don't mind covering real quick that you cover in the morning class, because I believe a lot of people do this still, where we having the client sign twice. So you guys, for my old, I keep calling you old, my old business owners. So I don't know if a lot of you do this, that when it comes time to printing, we go print bank document and have people sign, and then print final tax return and have them sign again. So apparently we don't have to do that. We could just go print final tax return and sign, and that's it. So Kevin
Right.
about to show us that.
yeah. So the first time, let me go. Do I have a bank app? I do on this one. Hang on, let me run through this real quick so that I can show you guys what it looks like. So here's my print settings right now. I don't have it selected for the bank application, right? Let me run through my verifies real quick. Oh, hang on. Was us messing around earlier? There we go. Just want to run through some verifications real quick. Each day included. Right. Oh, I'm going to just remove this form for right now.
While Kevin's working on that, Anna, I had a question.
Sure.
So for the questionnaire that we discussed that was on you guys' site earlier, y'all stated that that's something we can download and use personally.
Which questionnaire, Kevin, you referring to?
Hang on one sec. So you're talking about from
The documents page on the website.
yes, yeah, you can, and that's what it's there for.
Right.
If you don't already have a client intake form,
Mhm.
you can use this questionnaire, and I'll show you what it looks like.
Mhm.
And then we can jump back to what we were working on.
Right.
Here we go. See, I mean, it's about 7 pages long, but it is there. It's something that's by default. So, I mean, it has it has them consented to remote signature. It has them answering healthcare question, dependents, wages, salaries, the whole thing. So, I mean, it's a pretty good little form.
Yeah, it's thorough.
I mean, it helps because they're signing stuff as well, in particular about EIC. This whole page 6 is a really good page because they're talking about qualifying children for EIC and all of that stuff. So yeah, you can use this. Don't worry that it says tax year 2018. I don't know why the file name says that because it is 2021. The dates on it are for tax year 2021. So I don't know why that says tax year 2018. It's not. It is the 2022 form.
Okay.
And you guys, if you go to the website, Kevin, when you guys have time, if you take a few minutes to navigate through our website where it's acknowledge page, it's so much information. You see how you see documents, so much information you guys could take advantage of that we just put there. And everything that we put on the site, it is free for you guys to use.
Yeah.
With it downloaded and rebranded with your logo, it's fine.
Yeah, absolutely. Okay, so jumping back to here. So while I'm here, I'm going to point something out for those of you that are doing the fast cash advances. If you check this box, which is the first box, they are applying for a fast cash advance that happens after the IRS acknowledges the return. If you check this box and this box, for the pre-ac advance, you're applying for a fast cash advance that happens before the IRS accepts the return. So if you're sending anything right now and you want to get a check today or tomorrow, then you need to check both boxes. You have to apply for the fast cash advance and you have to apply for the pre-ac advance. It's together. Really what you're doing is applying for a fast cash advance, and then you're telling it, I want it to be before the acknowledgement happens. And that's what you do when you check that second box. So just to clarify that piece. All right. So stepping back to what we were talking about, when we go print final tax return, if you look up at the top in this print window, it says print final tax return with bank documents. So the first time I print this, it will give me the bank documents. Now, if I'm going to open it in a PDF just so it acts like it printed, and then I'm going to close this out. If I go print final tax return again, it's only printing the final tax return. So the first time that you print the final tax return, it will print with the bank documents by default. Now, if you want it to print the bank documents every time you print the final tax return, you can set that in setup, printer setup, 1040 return printing, and then select the bank application under whichever column it is that you need, right? Either prepare or client copy.
Now, Kevin, I think it'll be, do you think it's a good idea for us to have a mindset where let's set it up so at least for our copy to always print. And the only reason I say that is because many times the client will sign and then they'll make a change and we got to sign again. So if that scenario happened, would it print the second time around if we don't have that check?
Yeah, if you made changes. So look, we've told it right to print. So I'm not getting a verify error anymore, right? But let's say I go to this W-2 and I change this to 26,000.
Uh-huh.
When I go verify, it's going to tell me to print the bank documents again. So if I go print final tax return and hit next, it's going to print with the bank docs.
Awesome. So I guess we don't have to even do the setup on the back end.
No, not unless you want it to print every time.
And we don't want that because many times the client would just call and want a second copy and you don't want to print all those pages all over again.
Right. And if you're used to your process of print bank documents and then print final tax return, that works too. Like you
No,
don't
that's
have
not
to do
good.
this way. If you're used to that process and that's how your office is set up, you can still do it that way. Like it didn't change.
Well, it is too much work. I'm sure everybody would change to this because in the past we'll have to send 2 signatures to the client, where now we just had to send them to sign 1 time. So that's
Yeah, for the remote signature for sure. But again, every office kind of has its own process. I have customers that make them sign the bank documents and then transmit the return. And when the return is accepted, then they send them a copy of the tax return. So it's a matter of just sort of how your office is set up. I just wanted to make sure that everybody knew you don't have to follow this process. If you don't want to, you can still do print bank docs and then print final return as 2 separate things.
Got it.
Right. So easy enough on that stuff as far as that goes. Is there anything you want me to go over specifically before I go into tax law updates? Because I want to take a break before we do that.
Okay, so for the business, okay. For the new clients, let me just cover that. If you notice, the training is different in the afternoon. We're going faster because this is people that already know the system and know how to do taxes. So now, does anybody have any question before we start going over the new law as far as the software? Oh, you know what, Kevin? You need to cover, if you could cover these, what form change, any form that had changes to show them.
Well, I'll go through that when I do the tax law update presentation. We'll go back through and look at the individual forms on those things.
Okay, awesome. Anybody has any question before we take a break and go over the new laws?
I have a quick question. I think I missed the part. What did you say we had to do if the mobile app is not publishing? I'm getting an error where it says 0 publishing.
That should be published at that point. Try it should be published. Hang on, let me see.
It's not. I know you mentioned at that point it would show up on the software, right? Like
Yeah,
we would have that.
After you transmit. So you publish and then you transmit.
Have you transmitted?
Yeah. It's not giving me any options. So I uploaded a logo and then it's I'm clicking the publish mobile app and it's giving me that red.
Okay, but in this, in the software, go ahead and click transmit and then click transmit again and let's see if it changes. It may not. If it doesn't, let me know and I can fix it from here.
Okay, but Kevin, we probably just need to have her call support then after class.
Yeah, that would be the best idea.
Yeah, once your transmit doesn't work, be sure to call support, and which you probably get Kevin on the phone or another one of our rep, and they'll help you with that.
Yeah, I'm gonna transmit and see if that works. If not, I'll call it in.
Okay, awesome. Thank you.
Yeah, and you won't get me because I'm off today.
Oh, yeah, forgot.
I don't work weekends no more. Okay, so let's take 5-6 minutes, stretch, get coffee, get a glass of water, do what you need to do, and then we'll come back. We'll go over tax law updates. We'll look at the individual forms that you guys need to know about the most.
Okay, thank you.
Mm-hmm. All right, so here we go with tax law updates. We're gonna cover quite a bit today. We're gonna start with child tax credit and the advanced child tax credit reconciliation. We're gonna talk about the child and dependent care credit, a couple of changes to the earned income credit, the recovery rebate credit, taxpayer authentication, other things to know. So starting with the child tax credit and advanced child tax credit. So child tax credit for tax year 2021 is fully refundable. Previously, it was partially refundable, partially non-refundable. It is 100% refundable this year. The credit amount increased from $2,000 to $3,000 for children ages 6 through 17, and $3,600 for each child under the age of 6, so 5 and under. So I don't know if you caught it, but eligible children are those under age 18. So it used to be under age 17, now it is under age 18. Now, these new rules for child tax credit apply to taxpayers who had their main home in the United States for more than half of 2020. If they did not have their main home inside of the United States for more than half the year, then the old child tax credit rules apply. So they go back to the partially refundable, partially non-refundable, and the $2,000 limit. It's not $3,000 for those people, okay? There are 2 phase outs. So the first phase out, the credit is reduced down to $2,000 for filers when their AGI reaches $75,000 if they're single, $150 married, and then $112,500 for head of household. Okay. The second phase out, the remaining $2,000 credit will continue to be reduced based on the AGI and will reach 0 when the AGI is greater than $400,000 for a married filing joint, and then $200,000 for all other filers. Now, keep in mind, we're not talking about married filing separately because those people don't qualify for child tax credit at all or EIC. Okay. Now, beginning July through December of 2021, Congress enacted a law that authorized the IRS to send advanced payments of child tax credit to taxpayers in the amounts, which basically equals half of the total distribution that they expect for child tax credit. So the amounts were roughly $250 for each child between 6 and 17, and $300 for each child under 6. Now, the calculations for these advanced payments were calculated off of their tax return for tax year 2020 or 2019, whichever had been filed by the time, by July, basically. Okay. The IRS then created a child tax credit update portal, or CT-CUP, and that portal allowed taxpayers to opt out, opt back in, change bank account information, change filing status, number of dependents. But the most important piece for you guys for this year is see history of payments, the amount of each payment and how each payment was distributed. That's going to be important information because they do have to reconcile those advanced child tax credit payments. They will do that on Form 8812 Part 1B. The reconciliation is going to result in one of 2 things. Either they got the right amount, and so they'll get the remainder of the child tax credit, they'll get a refundable credit, or they'll end up with additional tax because they got more in advanced child tax credit payments than they actually qualified for. Now, we'll talk about those people who might have to pay back in a couple of slides. What I want to do right now is show you that Form 8812. So here's Form 8812. You'll see most of this is filled out by default. There's not really anything that you guys are going to have to fill out except this line right here. 14F is where you will enter the amount of the advanced child tax credit that they received already. So the payments that they received, the total from July through December. Now, where will they get that information? And we'll go back to our presentation to talk about that. They will get that information from a letter the IRS is mailing out. It's letter 6419. Those have already begun being mailed out. It will give them the amount that they received. Now, here's the kicker on this. It doesn't matter how much they actually received. It matters how much the IRS believes they sent. So if they didn't get the check, doesn't matter. The IRS believes they sent it, and that's the way it goes. So whatever amount is actually on that letter is the amount that you want to put in the software. Now, if they lose that letter or they haven't gotten that letter, where can we check that? And you can check that in the CT Cup or on their individual IRS online account. And I'm going to talk to you a little bit later about how they can access their IRS online account using ID Me. We talked about that. Okay. So for those taxpayers who receive more advanced child tax credit payments than they actually qualify for, they may have to pay it back. But there is a safe harbor for excess advanced payments. So taxpayers will not have to repay any overpayment of up to $2,000 per child if they're single and their AGI is below 40,000. It will phase between 40 and 80,000. If married filing joint, it's 60 and then phasing between 60 and 120. And head of household, the AGI is below 50 and it'll phase between 50 and 100,000. Okay. So as a response to this, the IRS has had to redesign the 8812 in its entirety. It is now used to calculate child tax credit as well as the other dependent credit. Previously, it was only used to calculate the additional child tax credit, so the refundable part of the child tax credit. It is now 3 pages long. Page 1 calculates the other dependent and the preliminary child tax credit, as well as the new refundable credit. Page 2 calculates the child tax credit and additional child tax credit for those people whose home was not in the United States for more than half of the year. And then page 3 calculates any amount that the taxpayer has to pay back due to receiving more advanced child tax credit payments than they actually qualify for. Most, and by most I mean 99% of your taxpayers will only need to complete page 1. For you guys, you will only need to enter the information that is there in from that letter, from the 6419 letter on line 14F of the 8812. Okay, so before I go to the next section, does anybody have any questions about child tax credit and the advanced child tax credit payments?
I do. I have a question.
Sure.
What about if, because it always happens, if customer comes to you and then they say they didn't receive any letter. So where do you go from there?
If they didn't receive any letter, and let's just sort of take it at face value, right? If they did not receive a letter, then they need to log into their IRS online account and get that amount, get that information. And if they don't have an IRS online account, they need to create one to get it. Because here's what will happen. If they say they didn't receive any advanced child tax credit, or they give you an amount that is less than what the IRS says, the IRS is going to kick that return into error resolution. And for those of you who are experienced, if a tax return goes into error resolution, it goes there to die. It will be there anywhere from 16 weeks up to a full calendar year until they actually get it resolved. So my advice to you guys is they either need to have that letter, or if they got direct deposits, they can bring bank statements that show how much was deposited, and even that's still risky. I would stick with either the letter or print out from their IRS online account or the CT Cup that shows the amount that they received. That's the only way to guarantee that their return is not going to get kicked into error recovery or error resolution for this issue. The same thing's going to apply when we talk about the recovery rebate credit. I know most of you guys saw instances of that last year where people said, no, I didn't get the recovery rebate credit, and they actually had got it. Or, and those returns, I saw some of them not funded until November of this year. So I would encourage you to talk to your clients now and say, hey, if you get this letter, I need it. Before you file your taxes, we need this letter. If they don't get it, have them sign up for an IRS online account using ID Me. And I'm going to talk about ID Me in a little bit, specifically about what that process is. But they're definitely going to want to have that information. And they can use their same IRS online account to check for the recovery rebate credit as well. Did that answer your question?
Yes, thank you.
Okay. Does anybody have any other questions?
Yeah, I just have one real quick.
Sure.
So in regards to, you stated that any family that's married filing separate do not qualify for the EIC or child tax credit?
Correct.
Okay.
Yeah, if you file separately, they cut you out of basically all of the refundable credits. I mean, it's really, really difficult to get any kind of refundable credit if you're filing separately. The reason for that is because they don't want to give it twice.
Right. Okay.
So. Okay, so no other questions on this? Oh,
To give Chanel an alternative, and Kevin, help me out if I'm wrong. So if you have a couple that are married but separated, of course, you know, you're gonna do married filing separate. If they have kids, the person who's claiming the kids able to do head of household for the purpose to get the earned income credit, but the other spouse have to do married filing separate.
No. I mean, that's sort of the short answer. If one spouse does married filing separate, then the other spouse has to do married filing separate. If they try not to, the return will get rejected. It will tell them you're
So
listed
they-
as a spouse on a married filing separate return.
So they
And
don't
so they
have,
have to do it.
even if they have kids, Kevin?
Yeah, doesn't matter. If they are, if they're married, they have to file either married filing joint or married filing separate unless they meet other qualifications for them both to qualify to file single, or for both of them to file head of household and single. But even in that circumstance, you're talking about pending divorce or separation over over a 12-month time frame, typically, for them to not catch trouble from the IRS. Yeah, but the IRS won't take it.
We have some couples that are together that are not divorced, and they do married filing separate, or they try to file that, and yeah.
Yeah, and they can, because you can choose to file jointly or separately, but the choice has to be mutual between both taxpayers, right? One spouse can't file separately and then the other spouse files single. It just doesn't. Right. That's not how it works.
I was trying to hope that they could get the credit, but obviously they're just not going to be able to get it with that.
Not if they're filing separately.
Okay.
Now, the idea, though, and this is the key piece in this, just sort of general tax theory here, you want to find out why they're filing separately, because the likelihood is it is not beneficial for them from a tax standpoint in majority of cases to file separately, in particular in a community property state. If you're in a community property state, there's almost no reason to file separately because you guys share everything. So your income and my income together gets split 50% either way. So it doesn't really matter. But a lot of times people will want to file separately because one parent owes back child support. Well, there's a resolution for that doesn't require them to file separately. Right. That's where the injured spouse form and those things come in. So I encourage you that if you had taxpayers that are filing separately, find out why. Some of them think they're supposed to because of XYZ reason, and they may not need to because of there may be resolutions for those things specifically.
Okay.
I have a question, and I don't know if you had this problem or if there's anyone that does health insurance here that can tell me. I had a client come in, they're married, they don't have kids, but she wanted to see if she could file separately from him to benefit for the Obamacare because she would qualify. But if she filed with him, then they make too much for her to get any insurance. He works independently, so they don't have really insurance help from any other jobs. I don't know, like I only know the tax point of view, and I told her what I think. But Because she says it increased like $500 a month per health insurance.
Oh yeah, I know. Yeah, it certainly does. I don't know that that will actually change anything, and I could be wrong because I'm not an ACA expert as far as that goes. So somebody else might be able to dive into this a little bit deeper than even I can. But my experience with it is that it is asking for the household income, not the individuals, when they sign up through the healthcare marketplace. So filing separately doesn't change the fact that their household income is still above the threshold. So I wouldn't think that that would matter one way or the other, but I would encourage them, if they're looking at something like that, I would encourage them to reach out to the healthcare marketplace and ask for guidance from that group of people versus from you as a tax preparer. That's outside of sort of the scope of what you guys do.
Okay, I have a situation here. I have a question. So if someone filed last year, married, right? Now, I mean, in this year, you know, they're separated. But the head of the household is, you know, is the male. So if this year he files again, and you know, he is put into dependents, the same dependents, you know, will he get the full child tax credit?
If he is claiming the dependents and no one else is, yes.
Okay. Okay.
Yeah, I mean that's how that generally is going to work. Is whoever has custody and has a right to claim that dependent will get any credits that are applied for, because he only has to report the amounts that he received as far as advance payments that he received, and not that someone else received. And that's where we're going to see some of this. I think where you'll see those people who might have to pay some of that money back is going to be those circumstances where you have two parents that are not married, and 1 year mom gets to claim the dependents and then the next year dad gets to claim the dependents, because mom received money and she has no child tax credit for the current year, right? If she claimed them in 2020 and dad's claiming them in 2021, then she got, you know, amounts that she probably should not have received because it was an advance payment on the 2021 tax return. That circumstance, unless that AGI falls below those thresholds, that person may have to pay back. So that's something you just got to kind of have to watch, you know, and you can't, as weird as it is to say, you can't assume. So you want to make sure that you're asking everyone, did you receive any advanced child tax credit payments from the IRS this year? Because they may have, but they aren't claiming the dependents this year, and you might not know that they're not claiming the dependents this year if you didn't do their last year return, for example, right? So I would encourage you to ask everyone to make sure. Again, ask them if they got that letter 6419, ask them if they got the letter for the recovery rebate credit. That'll save you a ton of headache, I think, in the long run. All right, so we're going to move on into the child and dependent care credit, because this is the biggest change that, quite honestly, is not being talked about enough. We've heard so much about child tax credit. This is a pretty big credit that's going to be plopped down for a lot of people. So child and dependent care credit is fully refundable for tax year 2021 only. The expectation is in tax year 2022, it's going back to the non-refundable credit it has always been, okay? The amount of qualifying child care expenses increased from $3,000 to $8,000, which means the maximum credit increased from $1,050 to $4,000, and that's for one child. They have two or more, those numbers double. 16,000, and then the max credit is at 8,000. Now, your clients, if they've heard anything about this at all, are going to hear two numbers, and they're always going to focus on the larger number. I'm going to get a $16,000 credit for childcare. No, you're not. The most you will get is $8,000. And that is if you have $16,000 in expenses. So the easy formula for this is, if their AGI is below 125,000, regardless of their filing status, you take the expenses and you cut it in half, and that'll be the credit amount. It's really that simple. So if they had $3,000 in childcare expenses for one dependent, then their fully refundable child and dependent care credit is $1,500. If they had $10,000 for one child, they're capped at $8,000. So the max out is, and the credit is at $4,000. Now, if they have 2 or more children, the cap is still 16. It is not 8,000 per child. It is, once you get to 2, that's it, you're capped out. Now you can still claim the expenses for more than 2, right? But you're not going to increase your credit beyond that $8,000 mark or that $16,000 expense limit. All right. Now, if their AGI is over 125,000, it will gradually decline. The amount of the credit will gradually decline until they get down to 20% of their expenses when they reach AGI 183,000. Now that 20% rate will stay in effect until they reach 400,000, and at 400,000, it completely phases out. Okay. Now, for taxpayers who had their main home outside of the US for more than half of 2021, the credit is not.
Sorry, before you continue, I have a question. So can anybody get the $8,000 for the dependent? They could.
They could, but they have to have $16,000 in expenses and have an AGI below 125,000.
Okay. Thank you.
Most people don't spend $16,000 a year, at least not in Texas, on childcare. That's a pretty steep amount.
Right.
But it depends on the number of kids, because the other side is this goes beyond just children in a way. Dependents who are not able to care for themselves and would fall in as a qualifying dependent for this particular credit. So the circumstances are there, but what the bigger piece is, for a lot of your taxpayers, you guys they weren't getting credit at all for their childcare because they had zero tax due, and non-refundable credit is used to reduce tax, right? Well, if they had zero tax, that amount was never going. So even if they're at $2,000 a year for childcare, that's still $1,000 in their refund that they're going to get back that they never would have gotten in 2020 or any year prior. So you are going to see a little bump in refund totals as far as that goes, but then it's going to be offset in a way by the child tax credit because they've already gotten money for the child tax credit, right? In a lot of cases, they've already gotten half of that child tax credit. So it's going to sort of balance itself out, but I expect refunds are going to be significantly higher on average this tax year because of the additional child tax or the child tax credit and then the dependent care credit. So I would really, really harp on your clients like, hey, if you've got dependent care expenses, I need them because I can get you more money. And if you use the phrase, I can get you more money, they'll deliver documentation like you've never seen before.
Hey, Kevin, this is Joanna. Just real quick regarding the dependent care credit. Does this also include, so I understand, like daycare, does this include aftercare? Like, the kid is 8 and they have to stay longer in school. Does it include those programs as well or no?
Generally, no.
Generally, no. Okay.
But you're going to want to go and look specifically because it's a lot of gray area when it comes to that kind of stuff.
Yeah.
So you want to look at it, and the IRS has sort of an FAQ up, and I want to say that was one of the questions. If not, you can look up what is it? I think it's topic 602. So if you search topic 602 on the IRS, I think there's more information specifically about who qualifies as a qualifying individual. Now, keep in mind, like child care, the child and dependent care credit for the majority is going to be dependents who are under age 13. So keep that in mind as well.
Okay, so that's good. Okay.
I'm trying to remember. I'm trying to look to see if it says specifically about after school programs, but I don't remember anything specifically about that. My understanding was it was related to primary care. And I don't know
Okay.
if after school programs qualify as primary care. They could. I don't know for sure.
Yeah.
So I would definitely look into that to be sure on that particular piece. Because again, a lot of the rules have changed for
Mhm.
these things. So yeah, I definitely look into it. But
Okay.
they have an FAQ, and then topic 602 would be
Okay.
what you would want to look at as well. That goes a little more in detail about it.
Sounds good. Thank you.
Oh, and that's exactly what I was talking about here. The child and dependent care FAQ is on the IRS's website. Go look at that, read through it. It'll answer a lot of the questions I think you're going to have. On the 1040, Schedule 3, Part 2, line 13G is going to show what's refundable. And I bring this up specifically because let me go to Schedule, is it Schedule 3? Yeah, I didn't do it on this return, but let's go ahead, Schedule 3. There it is. We are used to looking here, line 2, on Schedule 3 for the child care and dependent care expenses. This line now only applies to those people who did not have their main home in the United States for more than half the year, because that is the group of people that qualify for the non-refundable credit for child and dependent care expenses. Everyone else is going down here into 13G, which is the refundable child and dependent care expenses. So if you're looking and you're going, no, I put all this stuff in, and you go look at line 2 and you don't see anything, that's why, because that's the non-refundable part. And then line 13G is where you will see the refundable piece. Okay. So I want to point that out specifically because I know some of us go look at forms and we are tunnel visioned into looking for particular fields for things. Okay. I'm not going to worry too much about that. Okay. Permanent changes to EIC. So the maximum amount of investment income that you could have before was $3,000 before you were disqualified for EIC. That is increased to $10,000. I wish I had a better way to explain this next one, but I'll explain it like this. Taxpayers who have dependents, or have children rather, taxpayers who have children that have ITIN numbers previously did not qualify for any EIC at all. They can now qualify as a taxpayer without children for EIC. So they would essentially, what EIC is doing in this case is they're eliminating the children from the equation, and basically the taxpayer has no qualifying children, so they can qualify as a person who's single with no kids. I think that makes the best sense I can make out of it. For individuals who have no qualifying children, the EIC is pretty low and the income limit is pretty low as far as what they actually qualify for. So I don't know that you're going to have a whole bunch of people that this affects, but it could affect some. So prior year earned income election. So last year we were able to do this in 2020. If their 2020 income was greater than their 2019 earned income, then they could count. I'm sorry, that's backwards. If their 2020 earned income was less than their 2019 earned income, they could use 2019 to calculate EIC, right? We went through this whole thing last year. Well, this year, it's the same thing for the same year. So this isn't a typo. It is 2019. So if their 2019 earned income is greater than their 2021 earned income, they can use 2019 to calculate EIC. Now, there is one, I'm not going to call it a difference, but there was a clarification from the IRS specifically about this. And that is, in 2021, they do have to have earned income. So for example, in 2020, we saw quite a few people whose entire income was unemployment insurance, right? Well, unemployment is non-earned income. It's unearned income. So those people had unearned income and they had no earned income at all. Last year, the IRS allowed it for them to use the 2019 to calculate earned income, even if they had no earned income in 2020. In 2021, that is not the case. They must have earned income in 2021 to be able to use their 2019 earned income to calculate EIC. Okay. So looking at the software, I'm going to kind of break it down like this. And this is legitimately where I'm going to give you the most simplistic answer to it I can. Okay. If box 1 is 0, they cannot use their 2019 earned income to calculate EIC. There must be at least $1 in there. They must have earned income. And to do that, you're going to go down to this bottom section here. Let's see, it's 26.5. Okay. So I can come down here and put in this amount, right? Which is more than what I had last year. Check the box that says I want to use the 2019 earned income for EIC. And then when I hit tab, it'll either change or it won't. I bet if I do 36, it'll probably change. See, my EIC went down to 860. Now, depending on what the amount is, EIC is kind of a weird credit in the way it calculates. The lower your income, the lower your credit. The higher your income, the lower your credit. It's really designed for the middle class. That's really what it was designed for. It wasn't designed necessarily for low income. It was designed for the middle class. So, for example, if I had $5,000 in income, my credit would be really low, and my credit actually would be higher if I had 15,000 in income versus 5. So and I say that to preface this, as long as this number, as long as their 2019 earned income is greater than their 2020 or their 2021 rather, I would probably put it in and then just check this box and see, okay, so if I leave it like it is, it's 2338, right? If I put 2019, if I use 2019, then it goes down to 860. I'm better off leaving this unchecked. And that's sort of the best kind of way I can explain the right way to kind of do this is in that capacity. But the kicker to the whole thing is that they must have earned income in 2020. They must have at least $1. If all they have is investment income, stock income, unemployment, they're not going to qualify to, they're not going to be eligible for this. And even if you do it, you're going to run into a verify error that will tell you that they're not eligible. Okay. So let's jump back to our little presentation here. So individuals wanting to qualify with no children. So there's that group. I don't know if you guys have ever seen it on the forum where there's a whole little tiny section on the EIC, schedule EIC, where it talks about people who don't have dependents, who don't have qualifying children. Previously, you had to be at least 25 years old to qualify for EIC if you did not have qualifying children. They have lowered that age to 19. However, full-time students must be at least 24. Okay, if they are a full-time student, they must be at least 24 to qualify for EIC with no qualifying children. Okay. They have also eliminated the maximum age. So previously, if you were over age 65, you didn't qualify for EIC if you did not have qualifying children. Now they have removed that. So I think you're going to have some seniors that are going to get a little bit more money on their refund because they are going to qualify this. Now, again, they must have earned income. So if they're on retirement or Social Security, that's not earned income. They've got to have earned income to qualify. The maximum credit for this group is 1502, and then the credit is fully phased out at around 21,000. So this is specifically designed for those low-income single people. Okay. The recovery rebate credit. So they gave out $1,400 for everybody. And your tax family, right? $1,400 for dependents, $1,400 for taxpayer, $1,400 for spouse. That went out in like March, April, something like that. It has to be reconciled, just like the recovery rebate credit last year had to be reconciled, right? And you're going to do it in the exact same place that you did it last year. And I'll show you where that is on the 1040. It is right here on line 30. So if they got the full amount that they were supposed to, just check the box and you move on. If they didn't, you hit worksheets and you enter in the amount that they got. They will get this information from letter 6475, okay? Or from their IRS online account. They can get it from there as well, which is exactly what I'm talking about here. When taxpayer loses the letter, they'll be able to access the information needed by logging into the IRS online account. Which leads me to the Secure Access Digital Identity, or SADI system, okay? Basically, they can create an account through a company called ID Me that will verify their identity using facial recognition software. Okay, so what they will need to authenticate. So once they go to the IRS website, they go into tools, they go to my IRS account, there's a button there that says create account via ID Me. And what they will need is a picture ID, driver's license, passport. I know uniform services ID, but some government issued ID ideally. They need a cell phone with the ability to take a photo and upload. And then they will need another piece of evidence or multiple pieces of evidence to help prove who they are. Car registrations, bank statements, utility bills, things like that. Essentially, the same kind of documents that they would need to enroll their kid in a school are the kinds of documentation that they will need for this. And then they will need an email address. Okay, so what happens is they will upload the copy of their driver's license or photo ID. Then they will take a selfie and upload that. And the software at ID Me will use facial recognition software to determine if the person in the picture on the ID matches the person in the picture that was uploaded that they took the selfie, right? If those things match, then you'll continue to the next step, which is going to be the utility bills, car registration, things like that, the documentation to prove who they actually are. Once they've done that, they'll be able to create a password and then they can log into the system. It sounds more complicated than it actually is. It's really not that hard. And I would encourage all of you, if you have not already done so, go create an account so that you know what your customers are going to go through. Okay.
So the ID Me is going to be in the IRS website?
Yes, and I'll show you that real quick. Hold on. So let me drag this over here. So if you click sign into your account, that's the easiest way to get to it. And click sign into your online account. There's a button that says ID Me, create an account. And then you're going to enter email and password, and then you're going to go through that process of verifying your identity with the IRS. So I would encourage you guys to do this for yourselves so that you know two things. One, you know what that process is for your customers. And two, you'll know where to go find that information so that you can direct your clients to go find the child tax credit, the recovery rebate credit information that you need to complete their tax return.
Kevin, I actually did this 2 days ago, and it's, if you have client that's not familiar with computer, it'll be a little bit hard because you have to upload your ID. So you have to make save the copy of the ID front and back and so on and upload it.
Right.
So it's not something you can actually do for your clients. It's something that they
No, yes, and I'm glad you said that. You cannot do this for your clients. They have to do this themselves.
for themselves.
Yeah, they have to do this themselves. And that's what I'm saying. If you've gone through the process and actually done it yourself, it would be more helpful to your client when they call and say, I don't know how to do this. What do I do? At least you can give them a little bit of guidance. If they get stuck beyond that, then they're going to have to contact the IRS to get that letter. I'm telling you, just me on a personal level, I probably wouldn't file any returns without either one of those letters.
Can any person, does it have to be the taxpayer or the spouse can do this for the couple?
That's a good question. I would imagine that it wouldn't be a problem for the spouse to do it since they are on the return as a taxpayer. I mean, they're not listed as the taxpayer when you guys see it, but as far as the IRS is concerned, when you file joint, the taxpayer is both people. right? Both people are responsible for that return. So I would imagine that the spouse could do it just as easy as the taxpayer, and legitimately, they probably both could do it.
Okay, perfect. Thank you.
Okay, so 1040X, we got 2 changes and an explanation. It's the best way I can describe it. So beginning this filing season, you can now e-file amendments for returns that were paper filed and for returns for amendments where they are making a filing status change. Previously, you would get a hard no from the IRS on trying to e-file those amendments. That's been updated for this filing season, okay? Any refund associated with an amended return will come to the taxpayer via check. They will not do direct deposits on amended returns that result in a refund. So if they get a refund off of an amendment, it's going to come to their mailing address or the address on the return as a paper check. This will potentially change or could potentially change in tax year 2022. I know the IRS is working on it, but we haven't got confirmation for sure that that's going to happen.
Kevin, just very quickly, I'm sorry. This is Joanna. How far back can you go? Is it still just 3 years?
Yes.
And the question that I have, Kevin, this is Cecilia, is if I didn't do the taxes originally, but now I'm doing the amendment, am I able to e-file it?
Yes.
Thank you.
Yeah, as long as everything matches, that's going to be the only kicker to that. You know, as long as everything matches on the federal return, yes, you can e-file the amendment.
Thank you.
So, COVID-19 disaster related withdrawals from retirement accounts, typically 401ks. So last year, the Congress wrote a rule into one of the COVID relief packages that basically said you can withdraw money from your 401k if it's related to COVID or any other federally declared disaster area. So in those instances, those withdrawals were not hit with early withdrawal tax penalties, and they were allowed to spread the taxable income or the taxable amounts over 3 years. So basically, if I withdrew $30,000 from my 401k, I was taxed $10,000 in 2021 or in 2020. I'll get taxed $10,000 in 2021, and I'll get taxed the last $10,000 in 2022, right? For those tax years. And you had to do this. The election was done on the 8915E. Well, for tax years 21 and 22, you will use Form 8915F so that they can be taxed on that third that they owe. Okay, and I'm going to kind of briefly show you this form. It should be released. I had to double check this afternoon. It's not. Is that the right form number? Yeah, it's not released. They said it was. I'm guessing it's coming off a 1099-R then. We may not have it directly on the form. We may have it on the 1099-R. No. I guess we're waiting on the IRS to distribute that form because we don't have it yet. So I can't show it to you. But you'll use the 8915F to essentially take that amount. And the amount that you'll need to put on that 8915F is line 9 or line 17, depending on which type of disbursement it was, from the 8915E from 2020, because they're going to get taxed the same amount over all 3 years. Okay.
Sorry. Kev, I have a question.
Sure.
So I had a client who actually called me asking me, they were thinking about taking out some retirement money, that this option is no longer like available, like the tax credit that they're getting. It was
Correct.
for 2020.
Correct.
They haven't established anything for future for this particular year. Okay.
No, and there was never any intention to. It was specifically for 2020. Yeah, there was never any intention to carry that to 2021. It was one of the first things they scrapped in the American Rescue Plan Act.
Okay, thank you.
So the 7202. So when the American Rescue Plan Act came out, they did a couple of modifications to this self-employed credit for sick and family leave. So they extended the credit through 9/30 of 2021. They reset the 10-day maximum for the sick leave starting April 1st of 2021. And then they increased the number of days for the family leave credit to 60. Okay. Now, revisiting the general details of the credit. So the sick leave applied to self-employed individuals. They could claim up to 10 days of sick leave if they were unable to perform their services due to, they say due to COVID, and that's where we had to get some clarification. It's due to having COVID, actually being sick with COVID. That's why it's a sick leave, or caring for an individual because that person had COVID, right? The credit amount for yourself is $511 a day. That's the max. Let's be clear. That's not the total. That's not a credit amount. That's the cap, is $511. When caring for another, it's $200. So if their income, if their Schedule C only has like $8,000, you're not getting $511 a day for 10 days. They're going to get a percentage, right? That $511 a day, you got to be over like I think it's like almost $200,000 to get that amount. Okay. For the family leave, though, self-employed individuals can claim up to 60 days if they were unable to perform their services because of certain COVID-related care they provided for a son or daughter under the age of 18 whose school or place of care was closed for reasons related to COVID. Now, this is a clarification here. It has to actually be closed, right? If they have the option to do in-person learning and they chose to do at-home learning, they do not qualify for family leave under this program because the school was open. They could have gone to school, right? That being said, you're probably going to find a really difficult time finding anybody in Texas whose school is still closed. At any point in 2021, most of the schools were fully open, or at least doing a 50-50 split, right? Between you could be remote or you could be physically at school. I know that was the case here in Cy-Fair. Now, I know some of you have clients in places like California and New York. Those people could possibly still qualify, but you're going to want some documentation to show that the school was closed, number one, and number two, for the sick people, that they actually had COVID. They don't just get to claim 10 days randomly. You're going to want to be able to prove that. I know somebody had specifically asked that question earlier. So let me show you the 7202 so that you can see how this form actually works for this year versus last year. There are two sections for each credit. So if they got sick between January 1st and March 31st, then you'll use part one to take the credit for sick leave, right? And so if I put in my 10 days here, you'll see my credit is $4 because my Schedule C had a whopping $8,500, but my AGI, the tentative, and this is what it's calculated off of, is the business profit, right? And you see that here. That's my net earnings. So I would qualify for what amounts to $40 for those 10 days. If I was taking care of someone who had, or if the school was closed, for example, for family credit leave, then they would enter the number of days between January 1st and March 31st in part two. So if it was 25 days, then it's 25 days and I get a whopping $75 because my income is not that high. Now, this should say part three. I'm going to put in a request for that to say part three. Part three covers April 1st through September for sick leave. And then part four covers April 1st through September for the family leave. So there's two different sets of time frames, right? The reason for that is because the clock reset on the number of days April 1st. So if it was before April 1st, then that clock goes from April 1st of last year through March of this year. which means they may have claimed the credit last year. So if they claim the 10 days in the prior year, they don't get to claim the 10 days again unless they were sick between March 1st or January 1st and March 31st, right? And they didn't have 10 days before. The cap on the number of days is 10 days for each time frame. So April 1st of 2020 through March 31st of 2021, the cap is 10 days. They took 10 days on their 2020 return. They don't get to then take 10 more days until the clock starts over again on April 1st through September of 2021. Okay. It's a pretty easy form to fill out. Really, all you're doing is putting in the number of days. And in some cases, you may need to put in the information in line 4, and that's if you're carrying both. If you end up filling out parts 1 and part 3, or part 2 and part 4. Okay.
Kevin, this is Cecilia. About those people who got sick in October, November, December, they don't
They're out.
qualify for anything?
Nope. They are out of luck.
Okay.
Yep. Unfortunate timing. But that's the way the law was written. I think, honestly, the law was written, I think, under the pretense that we thought life would be 100% back to normal by October of 2021, and it wasn't. And now it's just infighting amongst Congress about getting anything done at all. So there were probably 40 to 60 more significant tax bills that were sitting in committees in December that never came for a vote because no one wants to work, apparently. So there were a lot of things that I was watching, which is one of the reasons that the tax year we pushed this training back, was because there was a lot of things that were hugely impactful that just never got out of committee that we weren't sure would pass. The IRA, Congress has a history of passing tax legislation the week of Christmas. So it's tough to do any real significant tax law training prior to that date without basically making educated guesses, in a lot of things. So I focus on facts. So I teach you guys what I know to be certain, right? What actually is law versus what things are not, things that might be law that haven't been passed. And for everybody asking, I just want to clarify this real quick. No, the IRS has not sent out an official date for e-filing to start. If you see anybody who's telling you it's February 12th, they got bad information. They were looking at last year. They were looking at 2021, not 2022. So, because that's when the season started last year, was February 12th. My expectation is that we are going to start around the 31st or February 1st. That's just experience talking. I don't have there's nothing official as of yet. The only thing official is that business returns can be filed starting yesterday. So somebody was about to ask a question of them. I didn't mean to step on you.
Yes, sir. It was me. So in regards to taking off for the sick and family leave credit, and the children's school have to be closed for them to get that credit.
Correct.
Okay. And then I know rule of thumb is that because I'm a parent, that they do send out those emails, from the district and the school, you have those class dojo apps that they use. That's something that we can request from them if they're trying to get that credit as well for proof.
Sure. Well, I mean, the reality is you could probably find it on any of the local news sites. There's always those things. You can just run a school district and see. Like I said, I know in our school district, they opened in October for in-person. They were at home learning in 2021 or 2020, rather late 2020, for August and September. And then they went to school in October, and they had the option then to do in-person or at home. And then in the second semester, it was all at the school. There was no option for at home. So as I said, in Texas, it's going to be hard for anybody to claim that one. But I know you guys have clients across the country. And so there may be places in which that's going to be credited. The trickier one is going to be places like daycares, because that one gets kind of in a gray area. Like just because your daycare is closed doesn't mean that all daycares are closed. So do they still qualify? And in that case, I would say probably yes, but I don't know for certain. And that's probably one of those things where you might have to, if you end up in a scenario like that, you may want to reach out directly to the IRS and get an exact clarification from them on that.
Okay.
Okay, couple of changes on the 1040. I'm not going to spend a bunch of time on this because we've already talked about a lot of this. Charitable contributions for non-itemized filers, so standard deduction filers, was moved from line 10B to line 12B. Changed wording for the non-refundable child tax credit. Changed the wording for the refundable child tax credit. They added in the line for the prior year earned income election, which we already knew about. There's a bunch of new lines on the 1040s, like I talked about before, on Schedule 1, Schedule 2, and Schedule 3. And really, I'll show you quickly. All they did really was just expand it out. So if we look at Schedule 1, for example, all of these lines right here, this A through Z line, all of these were in a worksheet for other income. Now they're all broken out separately. And that's really all they did. And they did it down here on line 24 for other adjustments. They did it on the Schedule 2, same thing. Other additional taxes. They spread that one out. That's really all they did with it. They just expanded out worksheets that you guys had already been using before. So not huge changes there. The only particular pieces is line 19 on Schedule 2 will show if they have to pay back any of the advanced child tax credit payments. And then line 13G shows the refundable and dependent care expense credit. We talked about that earlier. So that's it. That's the extent of the tax law changes for this year. The two biggest, child tax credit and then the child care credit, the 2441. So I will open it up to you guys to ask any questions that you have about anything.
Before we leave, I want to share something, taking advantage that everyone is online. I know some of you are used to texting me directly on my cell phone, and I will be out the country from next Friday, well, this Friday coming up, from the 13th all the way to the 8th of next month. So I say that to say to make sure you text the 713-679-4255 number, which that one is the one that Janet be able to respond back. I want to make sure that you do get help, the help that you need while I'm gone. Anybody have question before we're done? Already, Kevin, I think we're done. I think you did an amazing job. No one has questions.
I just have one quick question. I am so sorry.
I knew there's.
Look at you, Kevin. You almost escaped. It's very easy though. Are we gonna get a copy of this presentation or no?
Yeah, I'll send them to Anna as well as links to the recorded video.
Thank you.
Yes, also on that, I was also gonna ask if we were gonna get copies, because for us people that were just starting, last year was our kind of like our training season. This year we're starting as a business owners. It kind of, there's a lot of questions that, we have. So it's always good to go back and, review, the presentation and stuff. So it's very important for like people like me that are, like I said, are starting.
Yeah, absolutely.
Yeah.
Absolutely.
So as soon as I receive the link for this class from Kevin, I will forward it to everyone. So not only we'll email it, but we'll also send you a text so that we send it to your email. And you'll be able to watch this presentation again.
Yeah.
Thank you.
You're welcome.
Anna, how about the one for the employees for this morning? Can we get that one too?
Yeah. I both of them were recorded. It will take me a little bit of time for them to process, just from Zoom down to my computer. But yeah, by Monday, there shouldn't be any trouble for you guys to have those out and sent.
Alrighty.
Thank you.
Oh,
Thank you.
all right, so we'll be sending texts on Monday to set up appointments so we could do the one-on-one for everyone that needs help with that, okay?
Thank you.
No, you're welcome. Bye, you guys. Thank you.
Bye. See ya. Bye.
Bye.
Bye-bye, thank you.
You're welcome.